Hello everyone, and welcome back. This is part 2 of the 9 a.m. candle range model. Candles are ranges. Everyone who is coming from my TikTok should recognize this image. Candle 1, candle 2, and candle 3. Every single candle is a range on every single time frame. Time is fractal in nature. Ranges can either be turtle souped or broken out of and retested. Once again, those of you coming from my TikTok should recognize this as well. If you're not on my TikTok already, go ahead, give me a follow at the Soup Room and watch my latest videos. Every candle has a high and low, open and close, OHLC. This means on a lower time frame, you will have a range. That in itself is a timed range. From the candle open to the close. That is the range, the high and the low. Some candles are more high probability than others. How do we know this? Specific times. To determine the higher time frame bias, look to see if a higher time frame candle has been turtle souped or not. This is the key to bias, no matter the time frame. That last part was very important. Do not force it. It will be very obvious when it is time to enter a trade. Let's look at the example on the right over here. Candle 1, open, high, low, and close. The high and the low form the range. Candle 2, open, low, high, rejecting the previous candle's high, so the range high is being rejected, and we close. Third candle open, high, low, and close. The third candle will present the OTE. When? Right after we soup the first candle's range. Here's an example of what a timed range would look like. Let's take this candle's high and this candle's low, for example. Zooming in to the lower time frame, we can clearly see the high and the low form a range. Clearly in this trend, we are bullish. Why? Because we closed above this high. What are we looking for here? A retracement to the 50% of this range, looking for a turtle soup entry long. In the last episode, I mentioned very little about market profiles. Trend and range. That's what I left you guys off with. Those two market profiles are the only ways the market moves. The market is either in a trending or ranging state. Trend meaning expansion or distribution. Range meaning consolidation or accumulation. A bullish trend means highs are being broken and lows are being rejected. It's the opposite for a bearish trend, lows being broken, highs being rejected. What does that statement mean? These two statements, bullish trend and bearish trend equals highs being broken, lows being rejected. lows being broken, highs being rejected. This is the answer to understanding what program is the market in, buy or sell. Meaning, are we going up or down? If lows are being electrocuted and price is shooting back up, breaking highs, that is a bullish trend. You would be wanting to look for a turtle soup to go long once we reject the next low. It's the exact opposite in a bearish trend. The first breakout of a range is usually fake. That is the turtle soup. This would be considered the manipulation leg. I'm sure a lot of you know AMD, accumulation, manipulation, distribution. The turtle soup will always be manipulation. When bearish, we wait for the low that rejected a high to be broken through. The market shows an intention of bearishness by rejecting the high. You see, we'll get electrocuted by that high, pushing price back down. They show an intention of continued bearishness by smacking through the low. They show no intention of defending the low. So what does this mean? This basically means that once we reject a high, we want to wait for price to break past through the low that rejected the high. Vice versa when bullish. So here are examples of a ranging market. Here is a trending market. A range, as a lot of you know, is a consolidating market. A trend is expansion. So there's always going to be ranges on the lower time frame inside of a trend. As you can see, range, expansion, range, expansion, range, expansion. After an expansion comes a range. After a range comes an expansion. That is key. That is key. You do not want to be taking trades based on trend when we are ranging. You do not want to be taking trades in a trend thinking we are ranging. In a range like this one, bullish, for example, like I mentioned before, we are rejecting lows, turtle soup, breaking through highs. We reject the low and break through the high that rejected the low. SMT in this range, meaning ES likely had a turtle soup. SMT, expansion, range, turtle soup, expansion, rejecting the low, breaking through the high that rejected the low. Very important. As I've mentioned before, I will repeat. This is the most important aspect of figuring out what kind of range or trend we are in. Rejecting lows, breaking highs. Which high? The high that rejected the low. Look what happens. We will never come back below this high. Expansion, range, rejecting lows, breaking highs. Expansion, range, rejecting lows, breaking highs. Expansion. There will always be a turtle soup and then an expansion. Always. On every single time frame. Here's an example of a range from a higher time frame down to a lower time frame. followed by a trend. On the higher time frame, a range would look something like this. On the lower time frame, it would look like this. As you can see on the higher time frame, we are rejecting the lows, breaking through highs. Which high? The high that rejected the low. Once this candle closes above the high, not a wick, but a close, we can now consider this bullish order flow. On the lower time frame, it would look something like this. This right here is your order block. Extend it out and you can see we have an entry. This is the change in state of delivery. Keep that in mind for later on in the video. This is exactly what a trend looks like. We will expand up, breaking past the high, retrace back down to the 50% of the range, dealing range, high to low, turtle soup, and expand back up, rejecting lows, breaking highs. The power of 3, PO3, or as some like to call it, AMD. The power of 3 represents 3 stages. Of what? Of price delivery. This means there is 3 candles. And that is it. 3 candles. That is all you need, first off, to understand the power of 3, and secondly, to trade for the rest of your life. Why? Because if there is 3 stages, then all you will ever need is 3 candles. Let's take this image on the right. This is the same image that was in the first couple of slides. Candle 1 represents the first stage, candle 2 represents stage 2, and candle 3 represents stage 3. The first candle will form the range. The second candle is the turtle soup. And the third candle is the distribution or expansion. Power of 3 is accumulation, manipulation, distribution. We accumulate in the first candle, manipulate with the second candle, and distribute with the third candle. Write that down. Use the power of 3 to your advantage by combining it with the previous knowledge of candles are ranges. Go back if you need to refresh. Power of 3 occurs in every single candle. Time is fractal. Like I mentioned before, there is a range in every single candle. Understanding this is crucial to your success in trading. Focus here for a second. This image right above with the 3 candles is the higher time frame. The image below is the lower time frame. As I've mentioned, power of 3 occurs in every single candle. Open, low, high, and close. This is accumulation. Candle 2, open, high, low, close. This is manipulation. Where did we manipulate? We manipulated the high of the first candle. Stage 3, candle 3. Open, high, low, and close. This is distribution. This will be where you find your quickest trades, the highest probable trades. This is very important to understand. Please pause the video, rewind, rewatch this as many times as you need. Understanding these 2 images is the most important factor to determining bias and executing trades successfully. This is the higher time frame and this is the lower time frame. Time is fractal. If you're on the 4 hour, head over to the 15 minute or 1 hour. If you're on the 1 hour, head over to the 15 minute, 5 minute, or 1 minute. If you're on the weekly, head over to a daily or 4 hour. If you're on the monthly, head over to a weekly, daily, or 4 hour. Let's zoom in. As I've said, accumulation, manipulation, distribution. Right here, how do we know price will continue heading lower? We have a change in state of delivery. Keep that in mind as I'm going to explain more in the last few parts of this video. The change in state of delivery is the close below this order block. Once we close below with this candle, we can now confirm that we have bearish order flow. We can now confirm that the market has entered a sell program. We can now be confident to enter above candle 3's open, where in the order block. Short where, targeting where? The bottom of candle 1's range. Three candles, CRT basics. We're going to reuse the same image. This image basically represents CRT as well. CRT uses 3 candlesticks. Yes, you heard that right. 3 candlesticks. That is all you will ever need to trade ever. The first candle forms the range. We wait for the close. Mark the high and the low. This is a timed range. This is a specific candle, a specific timed range. Some may confuse this with a price range. However, this is a timed range. Why? Because you are going on a higher time frame, choosing a specific candle, waiting for the close, and drawing the highs and lows. Then you are heading on to the lower time frames to trade that candle's range, that time's range. A second candle will form souping or breaking the high or low of the first candle. This is basically going to be where the most advanced entries come in. Turtle soup. Not beginner friendly. Study the third candle a lot more. This will present the quickest trades, as I've said before, with the easiest entries, with very, very, very high probability. The third candle is distribution, expansion. It's really the quickest, fastest, heaviest candle in the entire move. When you're bearish, you sell above the open. When you're bullish, you buy below the open. This means when you're bearish, you only look for setups when you're above the open. When you're bullish, you only look for setups when you're below the open. So, candle 1, a timed range. Candle 2, souping the high of the range. Candle 3, we look for a setup above its open, where most likely an OTE. We short, and we target the opposing end of the range. If you study this the way you're intended to, all of you will only ever need 3 candles. Anybody who studies this, and I mean this, anybody who studies this, the way you are supposed to, properly, the right way, taking notes, studying after the fact, going on your charts, back testing, front testing, doing everything possible to allow your brain to absorb this knowledge. Then all you will ever need is 3 candles. This is the turning point in your career. The 9 a.m. candle range model. We'll talk about some specifics. Setting up the range. You've probably been wondering what candles to use to set up the range. Now, if you're from TikTok, you probably already know. Head over to a 1-hour chart. This is going to be our higher time frame. And wait for the 8 a.m. candle to form. What does that mean? When I say 8 a.m. candle to form, that means I need the 8 a.m. candle to close. I wait for the close. The close forms at 9 a.m. Draw the high and the low of the 8 a.m. 1-hour candle. Switch over to a 15-minute chart and wait for the 9 a.m. candle to close. The 9 a.m. candle on a 15-minute chart closes at 9:15 a.m. You need to wait until 9:15 a.m. until the candle closes in order for you to draw the high and the low of the 9 a.m. 15-minute candle. This is very important. You need to be able to draw the proper range. And secondly, you need to understand why. Here's the example. This is a 1-hour chart. The 8 a.m. candle has just closed. It is 9 a.m. We draw out the high and the low. The candle range high and the candle range low. Head over to a 15-minute chart. Wait for 9:15. Allow the first candle at 9 a.m. to form. And then draw the candle range high and the candle range low. This is on a 15-minute chart. So now what do we have? We have 2 ranges, and one of them is within the other. Very important. Here's the example on the lowest time frame. Well, there is lower, but 1 minute. 9 a.m., 15 minutes passes, we draw out the high and the low. How do we execute this? Remember the power of 3. It's in every single candle. Every single candle. If there is an open high, low and close, or open low, high and close, there will always be a power of 3. If bearish, on the hourly time frame, you will see the 1-hour 9 a.m. candle reject the 1-hour 8 a.m. candle high. This is the turtle soup. In candle number 3, the 10 a.m., we will distribute, expand lower to the opposing end of the 1-hour 8 a.m. candle. These 3 candles in itself is a representation of CRT. The theory I used to develop this model was CRT and power of 3. If bullish, do the exact opposite. Guys, you need to remember this is only if we soup the range. If we close above or below, you do not follow the same rules. Using the 15-minute 9 a.m. candle on a 15-minute time frame, we can find the turtle soup with precision, the most advanced entries. This is where the turtle soup is once again. In a 1 hour candle, there's 4 parts. 4 parts of what? 4 parts of 15 minutes. 4 quarters. Use the power of 3 to understand. Little cookie right there. Entries. Here's the juice. The most advanced entries will form between 9 a.m. and 10 a.m., catching tops and bottoms with high risk to rewards. The manipulation candle, turtle soup. This is the second candle in the range. As I said, the most advanced entries. 9 a.m. and 10 a.m. Why is that important? Because this is the 9 a.m. candle, the second candle in the CRT that we are looking at. 8 a.m. being the first candle, 9 a.m. being the second, 10 a.m. being the third. The easiest, highest probability, and fastest trades, like I've said before, will play out between 10 a.m. and 11 a.m. This is the third candle. This is distribution, expansion, usually an OTE or breaker. If you do not know what OTE, optimal trade entry, or breakers are, head over to ICT's channel and watch the core content. And another thing, if you're too lazy to go watch it, you should just stop trading. It's not for you. There's much harder things in trading than watching a few videos and taking some notes. I hope you know that. Entries. Once again, when trading between 9 a.m. and 10 a.m., we must focus on the 15-minute range that formed when the 9 a.m. 15-minute candle closed. You have to wait for the close to draw the high and the low. Do not be impatient. This range will help us understand exactly when and where to be expecting an entry. Once the 15-minute high or low is rejected, we can start to scope for entries. You need to wait for an OB to form. This is the entry. Why is this the entry? Because this is the change in state of delivery. What is an order block? OB. A lot of people have a whole misconception of what an order block is. An order block, a bearish order block, is the last up close candle, the last up close tick, thick, heavy, and obvious candle. That is a high probability bearish order block. A high probability bullish order block is the last down close candle, the last down close tick. This will be a thick, heavy, and obvious candle. Do not be impatient. Do not have impulse. Only trade off of thick, heavy order blocks. You do not need to force trades. That is how you lose money. That is why 99% of you guys fail. Stay focused. Stay with me. Do not trade any order blocks that are not thick and heavy candles. Order blocks are validated once a candle closes below it or above it. Like I said before, this is the change in state of delivery. This is how you validate bullish order flow. Number one, from the lowest time frame, actually. Very important. Very, very important. And this is how you validate the order block. Here's a perfect example. Those of you on TikTok got a little sneak peek. Firstly, you would be on the higher time frame. Draw out the high and the low of the 8 a.m. candle. This black line right here and black line right here. Stay with me. You wait for the 9 a.m. 15-minute candle to close. Low and high. Blue line, blue line. Once we get above the high, come back below. Remember, guys, key levels. We must hit a key level. There was a key level here. Come back below the low, close below the last up close candle in the swing high. Not this one, not this candle, not this candle, this candle. Why? Why? This is important. Write this down. The last up close candle in a range high will be the order block when we close below the low. Bearish order block confirmed. You would enter in this next candle. Where would you be targeting? The low of the 8 a.m. candle. That is your final TP. Now, you always need to take partials at the midpoint of the range. Or, as I like to do it, the low of the 15-minute range. You'll see most of the time the low of the 15-minute range lines up with the midpoint of the 8 a.m. range. Not in this example. Why is the midpoint important? That is what you're asking. The midpoint of a range is usually where we tend to see reversals, rejections, turtle soups. The potential of this trade working out, coming down to the midpoint, is very close to 100%. This means if you create a model using what I'm teaching you, only targeting the midpoint of a range, you will have a much higher win rate. Write that down if that suits your style. Now, always take partials at the midpoint because this is where we tend to see reversals. So even though we would reverse here, you would still take profits for the day, move your stops to break even if you do that, and you would be making money even when you're wrong. Here are two examples. Example 1 shows a 15-minute, let's call it a micro range, any time frame, and the 8 a.m., the macro time frame. So macro, higher time frame, micro, lower time frame. As you can see, the trend, the expansion is bullish. We want to look for longs targeting the high of the 8 a.m. candle, the macro candle range high. We're going to look to soup the 15-minute low, the micro candle range low. Souping it, looking for an entry in the third candle. As beginners, you guys do not trade the second candle. Do not be foolish. When you become advanced traders, and you will know when you are ready, you can start to trade the second candle. Wait for the second candle to close. Wait for the third candle to open. Look for your entries below the third candle's open. Order block, entry long. Targeting where? The 8 a.m. candle high. Partials at the 15-minute candle high. Very important. Example number 2. Macro candle range low, macro candle range high. What happened in this range? Same thing, expanding higher, rejecting lows, breaking highs. Very important. Order block right here. Close above an order block, displaced above an order block. This is the CSD. This is the change in state of delivery. We created the 15-minute range, souping the 15-minute range low into the order block. This is key. 2 points of confluence. reversing back up. Here are some more examples. The 8 a.m. candle high was souped with the 9 a.m. candle, turtle soup, and then we distributed all the way down to the 8 a.m. candle low. This is a perfect setup on the higher time frame. We have the 15-minute range, the high and the low drawn out. Where would we enter? Right here, we souped the 8 a.m. candle high and the 15-minute candle high. Key. We wait for the souping candle to close, the candle that forms the turtle soup, wait for it to close. Then you want to head on to a lower time frame, look for that order block and enter above the third candle's open. Look for your entry models above the third candle's open, which would be an order block, entry short. This is the lower time frame of this exact play. 8 a.m. candle high, 15-minute candle high, souped, order block formed. Very important. Change in state of delivery. We hit the order block within the third candle above its open, and we target the 15-minute low, take partials, and then target the 8 a.m. low. Very important. This is an A+ setup. Focus on this candle right here, the order block. You need to spot the right ones. A thick uptick candle in a range when you're bearish is the order block when we close below the low. The algorithm of time. So, why do we choose the 8 a.m. candles range? Why the 8 a.m. candle high and low? The simple reason is because the 9 a.m., the entire model, the 9 a.m. CR model is designed off of the 9 a.m. hourly candle. The 9 a.m. candle will either soup the 8 a.m. candle's high or low or break it. Very important. Very, very important. At 9 a.m. specifically, during the 9 a.m. hour. 3, 6, 9. These are the foundations of time. And more specifically, the foundations of the market. This is how the algorithms book price. At 3 a.m., 6 a.m., 9 a.m., there is always going to be a very high probability of souping a range high or low, or breaking it. Always, every single time. Focus on the soups for now. If there's no soup, there is no trade. The daily candle is divided into 6 4-hour candles. Remember the power of 3? Divide that 6 into 2. Divide it in half. 3 and 3. Using a 4-hour time frame, you can now draw out the specific ranges. For Forex, you want to focus on 1 a.m., 5 a.m., and 9 a.m. For futures indices, you want to focus on 2 a.m., 6 a.m., and 10 a.m. Those specific candles represent high probability ranges. We use 8 a.m. on the 1-hour time frame as our range. If you want to make your own models, go ahead. Back test, front test them. Don't be stupid. understand the concept of CRT, video coming out soon, and then you can create your own models using 159 for Forex and 2610 for futures. This is on the 4-hour time frame. This is the first half of the day. Why 4-hour? Because that's the power of 3. That's the highest time frame. 3 candles CRT. For example, you could use 2 a.m. on the Nasdaq on the 4-hour time frame to draw a range high and low. And then you can see a turtle soup at 6 a.m. So, short summary, 369 is where you want to look for turtle soups, and 159 for Forex is where you want to focus on drawing CRT ranges, and for futures, it's 2610. There's a lot more to the 9 a.m. CR model. There's a lot more. Think of it. What happens when you break a range? What happens when you break the high? What happens when you break the low? Comment below if you're interested in learning how to execute the 9 a.m. CR model when we're breaking out. A lot of you guys will learn how to basically use the 9 a.m. CR model when we turtle soup. What happens when we break the highs? If you want to learn, comment down below. Get to the charts. Backtest and study everything that you've learned so far. Rewatch this video as many times as you need. Remember, take notes. Focus. 99% of what you see online is noise. Filter through the noise. If you need to delete the social media apps, delete them. They are garbage. And you must always remember, smart money always operates on time and not price. CRT lesson coming soon. Good luck, traders.